Oh. What is going on, everyone? Happy Hump Day and welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts, and today, like every single weekday, we are coming at you live from our beautiful studio here in the heart of Las Vegas, Nevada. Today, we have extremely breaking news. The Department of Justice, the FBI, OFAC, the Treasury Department, the CIA, every single law enforcement in the world has brought down one of the largest cryptocurrency exchanges. We'll talk about that. We also have a very special guest joining us, a first timer on Sin City Crypto, Mr. Caleb Franzen.
Don't forget about our other special guest. DFib is back, bro.
What?
What DFib here?
DFib. Guys, if you're new here and you're like, why does Robin love DFib? It's a bromance no one can explain. They go way back, and by way back, I mean 6 months. DFib, we miss you, my friend. We hope you're doing well. So we have a lot of great content to cover. And again, our special guest will be joining us in about 25 minutes. So without further ado, there's Robin.
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information and package it up in a fun and sexy way. Also, here at Sin City Crypto, we watch Bitcoin spike down and spike right back up
That was
this
funny.
morning due to a
Don't.
breaking.
It's breaking.
Oh, my goodness.
It's going to break the markets.
It's going to break the markets.
But you know what else can possibly break the markets?
Okay, possible.
We got a giant box. So by the way, our community is the best. Okay. Brokioshi sent us a package. I tore the package open. I saw it was a box. I did not look in the box. But now.
Are we allowed to open this during the show? What if there's like a
We're going to trust you, bro.
Brokioshi, I am trusting you, bro. Do not get us canceled. I'm going to open this box live on air, okay? All right.
Big bag of schmicks.
Yeah. Guys, while he's doing that, if we can get some like button up in here, get people going, and then, yeah, if you would also subscribe and share our socials as well. We're going to set the club limit today at, what, 300?
300, baby.
We want to do 275.
300.
275 sounds good.
300.
275.
I say 300. Hold on, Rocco, what's your vote? 300 or 275?
300.
300. All right.
Oh,
We need the chat to break the tie. Are we opening the club at 300 or 275? Put your number in the chat. While you're doing that, I am going to open this lovely box that apparently Brokioshi made himself.
Looks like a wine box.
it does look handmade.
Yeah, it is handmade. Yeah. It's handmade.
What you got there?
It's
Is it a tornado?
What is
That's
that?
what I thought.
By the
Bullish.
way, there was a letter.
Oh, yeah. I put it right here.
He also sent a letter. I'm going to read the letter. He said, Jimmy said it looks like a cutting board. All right, this is a letter. Said, since you already got a new like sign, have fun figuring out what you use this for. Y'all are the best crew in crypto. Glad to be a part of the community. Love always. Brokioshi. He didn't say love always. Brokioshi, we love you, bro. Thank you so much. All right.
And we're going to send the whale members a little love as well.
Oh, wow. That looks super cool. Look at that.
Go full screen, bro. Go full screen. Is this Thor's actual hammer? And because I was able to lift it, does that mean I am worthy? Dude, this is dope. What are,
You're worthy.
man. Have fun figuring out what you're going to use this for. I got a great reason, but the only thing is if I throw it at Robin, it won't come back. That's the only thing. This is super cool, man. Thank you so much, Brokioshi. And I know you made the box. I'm curious if you made this thing yourself too. But
Yeah, he did make
This
the
is pretty
box.
good.
I
I
saw
said
the
I made
picture.
that too, yeah.
Yeah, he
my
made the
kids
box.
would geek out at this, by the way, which I'm going to show them later. But Brokioshi, thank you so much. Our community, we love you guys. You guys are always sending us cool stuff.
Speaking of community, we also have Kazuma in here dropping a $10 or 10 euro super chat. He says 10 euro tip. So muchas gracias and hola to you. Also, we have someone new in here. Was it Cameron Mitchell as well? So if you're new here, say hello so we can drop a hola right back at you. So, yeah.
And DFib says he's got the keychain version from Hobby Lobby.
Ooh, Hobby Lobby.
Mjolnir is the name of this the hammer, by the way.
Mjolnir?
Mjolnir, yeah.
I like mules. All right, so
I like
let's get
turtles.
into the absolute breaking news, guys. So the Department of Justice, they did a press conference, a massive exchange that you probably have not heard of, that I've never heard of. Bitslato has been charged with money laundering and criminal activities, and the Justice Department has taken into custody the founder and majority holder. Forget his name, but he is a Russian national. He was living in Hong Kong, and and so just to kind of TLDR here, but just a visual here. So this is pretty much what happened. So you have the knives are Luna, UST, Block 5, Orger, Celsius. We are sleeping, and the DOJ is protecting us from Bislato. But also, this is how the Justice Department felt after they busted it. Big bust. Wow, we're gonna bring down the entire ecosystem. Okay.
We got him.
All jokes aside,
have you ever heard of Bislato?
Never.
No.
I tried to go to their website, but it just had a bunch of Department of Justice.
Does that mean my Bislato account is frozen?
My Bislato credit card is not working anymore, guys?
I was getting 140%.
I like my Bislato with my cappuccino.
If you're wondering why we're laughing at this was such an anticipated news event.
God.
The price of Bitcoin literally tanked at the anticipation for the DOJ's announcement. If you were to take a look at the 1-day chart here, let's see here. This is on the 24 hours. You can see the giant move just off of the. So we were sitting at 21.5, and then we caught wind of the DOJ's announcement. So they had tweeted out, "Hey, news coming. We're taking somebody down on the international level." People were speculating. Price of Bitcoin dropped significantly, and then once we found out it was Bislato, rallied right back to 21,000. So,
literally. Okay, I'm not gonna lie. I thought it was for sure Binance, right? They said international exchange. Like, all right, it's not FTX. Some people were saying Nexo. Some people were saying Tether. I was like, it's got to be Binance.
I thought it was Binance.
I thought it was Binance because, a few weeks ago, you had the Department of Justice come out and say, it's a split whether we should bring these charges on Binance or not. I was like, all right, they made the decision. They're going to charge them. They got the freaking OFAC there. The FBI is there. And we got Bislato. So,
yeah. I didn't think that it was going to be Binance in the slightest. I know you were talking to me this morning, and I was like, nah. I thought maybe Gemini. I mean, I think I was overshooting with Gemini too, obviously. Yeah. In hindsight.
Well, I didn't think it was Gemini just because they're not considered. Well, they are overseas.
They operate overseas.
International exchange, right? When you say international exchange, I'm thinking Binance.
Oh, they operate international.
Wobi, stuff like that. So,
where do you think Bislato's originated? Like, where do you think it's?
It was so the guy was Russian, but I believe he was domiciled out of Hong Kong.
Yeah, so it was the DOJ's press release. They referenced using China as an area. I don't know. Is basically as a Chinese Russian exchange nobody ever heard of, and you're over here having a massive press release. Like, come on, man.
Here's the crazy part too, guys. Is they literally said we've spent the last year. And assuming they've spent probably millions of dollars, but apparently around $700 million was illicitly, essentially laundered through Bislato. So to them, it's a win. To us, I guess the reason we're so underwhelmed is because we're like, oh, okay, well, I mean, hacks happen all the time. We expected something huge to rattle the markets, the last Black Swan event possibly, and it's an exchange no one's heard of.
Mm-hmm.
But you know what is something that a lot of people have heard of before we get into the
like button?
The crypto markets? Yes, the like button also.
Hey, the community said 275, by the way.
That's the number?
Yeah.
All right, 275.
Club limit, 275. Let's go.
All right, let me make
sure. How do we open up the club? By getting this like button up, first of all. Chatting up in here and being active.
Yes. All right. You know who, a company people have heard of is Ripple. If you are an XRP fan, and you're a member of this channel, throw your XRP emoji in there. If you're not a member and you want to be, there's a link in the description. But if you're not and you don't want to be, just go ahead and throw an X in the chat because Mr. Brad Garlinghouse, the CEO of Ripple, which is the company that is currently in a lawsuit with the Securities and Exchange Commission.
Man, I like his coat.
Yeah, it was nice. Well, he's in Davos for the World Economic Forum. And he did an interview with CNBC. And he was asked a question about the lawsuit. And here's what he had to say.
in the US, the SEC, Brad, let's get a check-in on what's going on with that lawsuit with the SEC and Ripple. Are you nearing an end potentially? Are you planning to settle with the SEC?
Well, we have always said that we would love to settle, but it requires one very, very, very important thing, and that is that on a go-forward basis, it's clear that XRP is not a security. The SEC and Gary Gensler has very outwardly said he views almost all crypto as a security, and so that leaves very little space in a Venn diagram for settlement. The case is now fully briefed in front of the judge, and judges take however long the judges will take. We're optimistic that this will certainly be resolved in 2023 and maybe the first half. So we'll see how it plays out from here. But I feel very good about where we are relative to the law and the facts.
So are you going to wait for the judge to come out with a decision on this one?
I'm very optimistic, and I think absent some significant change in posture from the SEC, I can't imagine that we won't have resolution from the judge. I also will point out, and I've certainly something I've heard here in Davos repeatedly, is how important this is, not just to how Ripple it goes forward, but also really the whole crypto industry in the United States. And I keep reminding people that outside the United States, crypto is still thriving, Ripple is still thriving, and we should make sure we continue to engage non-US regulators as well.
I mean, it's also difficult to say it's thriving when so many people have lost a lot of money speculating. And the key word here is speculating on the price of Bitcoin and various.
So it's interesting, he said. By the way, this was, just to give some credit here, this was posted by, on Twitter, Arjun Karpal, at Arjun Karpal. So apparently he's a correspondent for CNBC. So are you surprised, excuse me, Robin, that he said we would be open to taking a settlement, but one thing is clear, XRP has to be labeled not a security. A lot of people are saying...
Well, here's the thing. And you say, am I surprised? Like, first of all, settlement's always on the table. I mean, XRP, Ripple Labs, like they don't want to go through this long drug out court case. Now, it would be nice, I'm sure, for them to stick it to the SEC and win the court case. But at the end of the day, that's a lot of time and resources, and also liquidity that you don't have in the American markets while all this plays out. And so, would you like to just win? Sure. Realistically, they'll settle in a heartbeat. But what is he saying? He would settle if XRP is not a security. So essentially, he's saying that the entire merits of the case has to be dismissed because the whole premise of the court case is to say XRP is a security. So I don't understand how they could settle and have any admission of guilt. Because if you're settling and you're not a security, then there's can't be any repercussion, right? So him saying that they would settle, what would they be settling on? What would they agree to? You get what I'm saying? So maybe they pay. I guess there's what a settlement would look like for what he's saying is that, okay, we pay a fine, say that we didn't launch something correctly, but we're not a security. And I just don't see the SEC going through the whole process of litigation and going to court. It's highly publicized as well. I think it would be a bad look for the SEC. Not saying that obviously we would like this to be done, but for the SEC's point of view, thinking about like how they approach this, it would be a bad look for them to put all this time and resources, simply settle and be like, you're not a security. Obviously that would be a big loss for them. So I wouldn't take these words as, oh, hey, settlement's coming, whatever, I think the court case is what it is, and I think it's going to stay the course. I don't think that
he said first half of 2023.
Yeah.
So, and I'm pretty sure we all agree with what Brad is saying, that this case, the outcome and the result of this case, is not just important for XRP and Ripple, but it could send ripple effects to the rest of the crypto markets, pun intended. And so even if you hate XRP, you should be rooting for Brad Garlinghouse and Ripple to win, because it could literally set precedents for how crypto is regulated moving forward. Because at the end of the day, if the SEC wins and XRP is deemed a security, now the court system have a case that they can fall back on and say, well, it's kind of the same thing. Ethereum, kind of the same thing. Polygon, kind of the same thing. And they can fall back to this court case in the ruling and say, well, it kind of falls in the same line. So yeah, it's a security. So Whether you're a fan of XRP or not, you should be rooting for Ripple to win.
Yeah, guys, put the XRP emoji if you got it on deck for our members, and then also let's do a 1 and 2 here. If you guys think that the court case will be done, settled, or resolved within the next 6 months, put a 1 in the chat. If you think this thing is going to drag out longer than the Lord of the Rings trilogy, put a 2 in the chat. So there you go.
1, under 6 months. 2, longer than 6 months. My vote's a 1.
Yeah.
Yeah.
I'm going to
No
go
way,
2,
bro.
man.
2.
The judicial system moves so
Yeah.
slow.
Yeah. Anyways, Rob, what are the rest of the markets looking?
All right. So let's take a gander here. We got Bitcoin coming in at right at 21,000, basically just shy of it. And as we mentioned this morning, we were over 21,000, but a nice little rebound. I do think we're going to start creeping up to the $22,000 mark, which we can discuss more in a technical analysis perspective here in a moment. And then just to show how we got here, I know we pull this up every day, but this is what the month chart looked like. Very low volume and or volatility. And we've finally broken out to the upside. And we've regained a lot of the losses that were incurred during the FTX collapse. Taking a look at the ecosystem here, everything is slightly in the red. There are some that are down more than others. Cardano's down 4%, Polygon down 5%, Solana down 6%, and then Polkadot down 5%, Avalanche down 7%. So now to take a look at the biggest gainers and losers across the top 100, you have Kava and Shiba Inu and Hedera all over 7%. So some big movement there in those. And some of the biggest losers, you have Gala, which saw a massive run up. So we were expecting a pullback. So no surprise there. Down 11%, still up 22% for the week though. This got as high as 5.5 cents, almost 6 pennies. And, it was 2 weeks ago, I think it was at 1 cent. Let's take a look. We do have, if you're a fan of Gala, make sure you tune in tomorrow. We have one of the
Bitbender will be joining us.
Yeah,
So you're a Gala fan, you know who that
yeah.
is.
So it was January 5th. So 13 days ago, we were at a penny, at less than 2 cents. So just to show you how big of a rally we've had lately. Now,
If you bought there, are you selling right now?
you asked me this yesterday.
Yeah, but we have different viewers today.
Well, it depends on when you purchased.
Well,
It
if you
depends
bought
on how
there-
long
You bought there.
Exactly like I said yesterday. If I bought at a penny and I'm not looking to hold long term, I would probably sell now before it pulls back because it's going to retrace. But if I got longer than a 2-year time horizon, I'm just going to keep DCAing, and it's still a good value. So, all right, that's all I got there on the charts. Taking a look at the crypto bubble just to get a visual confirmation of what we're looking at. Saying, you have H bar up, also Mana up 74% for the week, and then the crypto fear and greed index coming in at 52. So we're creeping up. A little bit easier sentiment. I wonder what this will look like for the next print, which will come out in it's like 5 hours. Yeah, 5 hours. So with this little shakeup we had this morning, I'm assuming we'll probably pull down to the 40s, right? Just because of the volatility. And then traditional markets down 1% here across the board, with the exception of the Dow Jones. And so there you go, brother.
Wow. Thank you for that, Robin.
You're welcome.
So let's take a look at staying on the kind of the macro. Let's take a look at what groups have been performing well and what groups have not been performing well. So over the last week, real estate, technology, and consumer cyclical markets have been in the green, with energy coming in at 2%. So energy coming in at number 4. So that's still gaining some traction as far as the price of the stocks that are in that sector. And then over the last month, basic materials, financial, and energy. So a lot of people are anticipating higher gas prices moving forward. Summer is 3-4 months around the corner, which people travel more. So more demand for fuel, not just for cars, but for airlines and trains and all that stuff too. So liquidations. So over the last 4 hours, $182 million of crypto has been liquidated, with 82% of those being longs. You have ETH leading the way at 56 million, followed by BTC And then Doge, Solana, and Aptos round out the top 5. Now, of course, we can speculate that when the Department of Justice came out and said, we are going to charge a crypto entity, an international entity. People assumed it was Binance, it was Tether, whatever. Everyone started panic selling. Longs got liquidated. Well, now it's not. It's some exchange nobody knows. And so the markets are starting to rally a little bit. This should be interesting to watch tomorrow over the next 12 hours to see what kind of liquidations are we going to see short start getting liquidated? Because you got to assume a lot of people put short positions in as well. So I like to look at crypto rank and I like to take a look at the volatility. So out of the top 100, the most volatile tokens have been Gala, Link, not Chainlink, but a different Link. Never seen that one. That's in the top 120. And then you have the AI token Fetch AI. And then Aptos with 39% volatility. I have a little bit of Aptos. I haven't really done too much of a deep dive into it, but I know they were another Sam coin. I believe they were another huge layer 1, fast, cheap, blah, 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 blah. But, you know, I FOMO'd it a little bit. All right, Bitcoin, 1 hour. We were in this ascending wedge, essentially, which does typically break to the downside. And we've seen it break to the downside. And we've seen it get rejected at this lower trend line, which is right at $21,000. Now, if we keep bumping up against this, we're eventually going to fall down. Well, where are we going to flatten out if we do fall down? The first level I want to take a look at is going to be where we wick down twice, which was right at the little under $20,000. We wicked down here twice on Saturday, and then we wicked down here once earlier today, about 8 in the morning Pacific time. So if we break that and we come back down, the next level I'll be looking at is right at 19,000 flat. So we'll see what happens. But some positive numbers on the macro side did come in. We're actually going to discuss that with our guest Caleb. He's big into macro. And then one more thing, Solana. Now the theme of this show is FTX is looking to dump, or the bankruptcy estate is looking to dump the liquid assets that they deemed for FTX and their creditors. And one of the biggest ones will be Solana. And so what is Solana's price action looking like and what could happen? So this is the daily on Solana. I've drawn a trend line here. We've gotten rejected off this trend line 3 times now. 1, 2, and 3. The first time was back in May of last year, followed by August of last year, and then more recently, November. And then we almost went and touched this trend line. This would have been a touch at $29. If we fall back down, I would expect us to see $14 again. Now, of course, this is on the daily chart, so things might change. But if we do bump up against this resistance line again, you're looking at $25 because it is a down sloping resistance line. And then finally, on Ethereum, kind of the opposite. You have a little bit of an uptrending line, kind of similar to what Bitcoin is looking like as far as a rising wedge or a rising parallel channel. This did break to the downside. Now, I want to note this is a 15-minute chart on Ethereum. You saw the big DOJ dip followed by a V-shaped recovery to test this trend line here, which was right at $1,566. We did get rejected, and now we are consolidating at $1,538. I would expect us to retest this level again, that 1560 to 1570 range. Volume is looking good, and RSI is kind of right in the middle. RSI is sitting at 40.
We got a super chat.
We did.
Another one from Kazuma.
Damn.
Another $10 euro.
Baller.
You know what I'm saying? Did you just get paid or what? Whatever. So he says bear markets are created so institutions, the rich
and the elites,
to accumulate twice the coins and
prepare for the upcoming bull run.
Yeah,
they don't care about retail market. I can buy into that.
Mm-hmm.
I said this on the show, I believe a couple of weeks ago. I think we're going to see a lot more institutions jumping in and picking what blockchain they're going to work with moving forward when it comes to blockchain technology, and say, all right, if we're going to work on Hedera, if we're going to work on Polygon, if we're going to work on Algorand, we want to have a say in the proposals moving forward. We're going to buy up a bunch of their tokens. We're going to stake them, and we're going to have a say.
Then also, I just want to give a little bit of love to the chat. If you're new here, say hello so we can drop an hola back at you. We got a few new people. G Maximum Well. He is here for Caleb, he says. Also, we have
right.
Tyler. We got Dan E. Unavailable. Jerry with a G. G's XRP. Jerkle. ETH, Cody, Med, Inas, Chef Goldblum,
Jerkle ETH.
Bubba 21, and the number one that has a picture of a baby on there.
I love babies. All right. Without further ado,
To all of you, hola!
Without further ado, let's go ahead and bring our first-time guest on the show, Mr. Caleb Franzen. Caleb, how you doing, my friend?
Guys, how we doing?
I'm good, man.
Good to
How
see
you
you.
doing?
And no complaints for a Wednesday. I know price action's a little choppy, but what do we expect after 3 weeks of straight up? So here we are.
True that. Were you floored by the news of the Department of Justice going after the largest cryptocurrency exchange in a small city in Russia?
Absolutely shocked. Quite literally, I don't think anyone saw this coming. So
Literally.
but thank God
right.
I can sleep well at night now.
So do you think the downward price action, Bitcoin did get to about 20,200. You think that was because of everyone anticipating maybe it was Binance, maybe it was Tether, maybe it was another big exchange?
I actually don't think so, because if we just look at kind of like broader market dynamics that occurred shortly after kind of today's traditional market open, we saw the S&P 500, the NASDAQ, oil, everything reversed. And so, clearly Facebook stock isn't going to be impacted by, the DOJ coming down on any sort of crypto exchange. And so this to me just really felt like kind of a broader market correction, if you will. Again, right, we've had kind of this exponential phase up in risk assets for the past 2-3 weeks. And so we would expect to see some form of consolidation phase. And so for me, this was much more psychological than it was news driven.
Now, Caleb, before we move forward, because this is your first time on the show and some people might not be familiar with you, would you do you mind kind of talking about yourself, your background in crypto and kind of what you do on a day-to-day basis?
Yeah, sure. So I'm 27 years old. I come from the traditional finance industry. So I worked in wealth management at Merrill Lynch. I did 2+ years in banking as a commercial portfolio analyst. And in September of 2020, I quit my job to start doing my own independent research that I share online. So that started initially on Twitter, where I'm really covering different dynamics that are happening across the economy. I have a bachelor's degree in economics from UC Santa Barbara, which is where I'm from originally. And so Twitter was kind of the first place that I started sharing my research, really just trying to expose people to new ideas and the way I approach market dynamics. And then I actually started a newsletter in May of 2021 called Cubic Analytics. It's a free newsletter. Basically, what I do is I highlight, again, different things that I'm seeing across 3 different pillars. So I focus on the macroeconomy, the stock market, and Bitcoin. My journey into crypto, I think, was kind of your final bookend question there. Yeah. I was a massive crypto skeptic. Even going into 2016, 17, I thought it was all just a fugazi. Didn't make any sense to me. I think especially because really kind of coming from that traditional market background, right? I've been dealing with stocks for the past 9-10 years, right? So for me, with crypto kind of being the new kid on the block, for whatever reason, I just had a lot of distrust and lack of faith in the overall system of crypto, but really did my homework after that 2017 crash, going into the 2018 bear market, read the white paper, and then I saw all the writing on the wall when the Fed announced massive QE in March of 2020. I had a friend that was calling everybody up, telling them, you need to start buying assets. I had a friend call me up. He's like, you're going to hate me, but I actually bought Bitcoin. And I was like, you know what? I love it. I'm actually doing the same exact thing. And so, my entry into crypto was in mid 2020 and then especially late 2020. And I've really just kind of been in the space since, albeit, I'm definitely much more of a Bitcoin maxi than I am a fan of crypto, broadly speaking, but I obviously keep a pulse on everything that's happening in the space.
Why is that though? Is it because, why are you more prone to liking Bitcoin? Is it because it's the most decentralized? Like, what is your theory or thinking behind why you take that stance?
So I view Bitcoin as a monetary network. And so for me, looking at kind of the overall crypto space, for me, it's purely technology, right? And so really smart people are working on really smart projects and use cases that eventually down the line could have real world impacts. As far as I'm concerned, when I look across kind of the overall crypto landscape, for me, like I said, it's heavily in fintech and it's a lot of yield chasing. And so When I look at something like Bitcoin as being a fixed, programmatic, known monetary supply, I can't necessarily say the same about any other crypto. Even something like Ethereum, right? We can come, the Ethereum Foundation, there's a CEO, there's a marketing team, there's a whole background of employees. Bitcoin has none of that. So I like how you obviously mentioned the decentralization aspect. For me, that's very important, but I really approach markets and investing and economics from an Austrian economics perspective. And so for me, I was a heavy gold bug, really trying to understand and be a proponent of the sound money kind of values, if you will. And so for me, Bitcoin strikes and checks all those boxes, whereas something like Ethereum or Cardano doesn't. And so I think there's a place for those other altcoins in a portfolio or as a trading mechanism. But for me, coming from a sound monetary network point of view, that's why I kind of put Bitcoin as king.
And now you mentioned you've worked in traditional banking and finance and portfolio management. Is that kind of the resounding narrative across outside of our small crypto space and the more TradFi space? Do they share the same sentiment that you're sharing with us now, that, hey, Bitcoin and the rest, they're two completely separate categories?
I actually would say it's the exact opposite. People there's no bifurcation of Bitcoin versus crypto, and this is something that I've tweeted about before, where Bitcoin is a cryptocurrency, but not all cryptocurrency is Bitcoin, right? And so I think for a lot of people in traditional finance, whether it's wealth management or banking, first of all, people aren't really talking about it that much, at least when I was in the industry over 2 years ago. But on top of that, right, I think people just kind of lump everything together. And so for outsiders in traditional finance, they really just kind of view it as this, bubbly, space that, not much really makes sense. What is it? What is all of this digital asset space? And so for them, they're just kind of, it's a lump of confusion in a lot of ways, I think. So even for them, it's a mission, I think, to have conversations about why Bitcoin is different and what fundamental aspects make it different from the rest of crypto fundamentally.
I think that you have a lot of by the way, man, I'm Big Rob, by the way, man.
Yeah, I'm David. Sorry.
Yeah. Thanks for introducing me, David. Appreciate it. I do think that these cryptos, especially the stable ones that have been around for quite some time. I know it's an emerging industry, but I do think they're pretty likened to commodities. I know Bitcoin has kind of got the stamp of approval for being a commodity, but if you look at commodities, a lot of people just like to think of precious metals. But don't forget that you also have commodities in the form of energy, oil, and they have more utility and use case than obviously a store of value. So, I personally look at Bitcoin as gold or diamond or platinum, whichever precious metal you want to look at, does have some utility, but essentially it is more a hold than anything else. While you have things like Ethereum and these emerging technologies, that are facilitating the needs of both finance and in data storage, the movement of energy and information.
You're starting to sound like Michael Saylor, by the way.
Hey, time and energy, man, moves at speed of light. So there is going to be the problem though is that when you look at the likes of the altcoins, is like who's going to be here in 10 years, and so that's where you're taking on some massive risk trying to identify which players are going to be here in the long term, who doesn't have some malicious intentions hiding beneath the sheets, because right now there's no transparency. So it is murky there. And that's kind of what we do, is we're trying to give as much information when it comes to the alts. We don't need to beat the drum on Bitcoin. We're big fans of it. That's my number one holding. But, so for us as a channel, we're trying to, trying to cipher through, figure out what are the best projects here, because I do liken them to emerging technologies.
You said your biggest holding was SHIB last week.
Stop! It's not SHIB. Get out of here.
Caleb, staying on Bitcoin, I want to share a tweet, and this tweet is actually from you. So guys, if you're not following Caleb on Twitter, at Caleb Franzen, the link to that is in the description of this video. Also, if you want to subscribe to his newsletter, the link to that is also in the description of this video. So you tweeted, Caleb, Bitcoin's 12-month Williams oscillator could leave the oversold lower bound this month. Historically, Bitcoin leaves the bear market once this crossover occurs. Could this time be different? Absolutely. Do you think this time could be different? What's your take on this?
So this is one of my favorite charts right now, especially for people who would consider themselves to be long-term investors and people who might consider themselves to be opportunistic when it seems unfavorable under current market conditions. And certainly right now, it's been an unfavorable environment. And so in that chart specifically, what we're looking at is the 12-month Williams percent R oscillator. And this is a chart that I've been sharing basically since Q2, I think, of 2022. So it's been almost a full year that I've been letting people know, first of all, when we crossed beneath that lower bound, which is the oversold indicator. And, I'm also looking at things like the 18-month and the 24-month. But this 12-month here is super important, super accurate. And so what it shows us are these key kind of oversold levels from a statistical perspective. And we can see that, certainly once we enter that oversold lower bound, that we can stay down there for quite some time. But in the past, once we've left that lower bound threshold, the bull market typically resumes, and we've put those lows in behind us. We could see that in that April 2019 case, we kind of went sideways for about the next year plus before finally getting that upwards momentum. And so for me, the way I kind of look at this is this helps us to really tune out all of the noise that's happening in macro, all of the noise that's happening with S&P 500 earnings, with geopolitical concerns and risks, with the federal debt ceiling, so on and so forth. And this really just allows us to take a fundamental approach to understand how buyers and sellers are interacting based on a historical precedence. And so this chart right here is super important. You can see we still haven't crossed above that lower bound. So this is something to have on our radar as we get towards the end of January. But as of right now, we don't have the signal yet. And so clearly, statistics don't operate in a vacuum. That's super important to understand. But this is also very important to have in our back pocket to contextualize against fundamental market dynamics.
Amazing. I hope this time it's not different, that we have seen the lows. But if not, hey, guess what? We'll just buy more Bitcoin. All right, Caleb,
That's right.
I want to pivot to, so the theme of today's show, which was the dumping of tokens. Okay, so FTX, I'm sure you've been following the whole FTX thing. The market completely crashed. Well, the bankruptcy court came out and said, hey, we found close to, or a little over 5 billion of liquid crypto tokens that they can use to pay back creditors. Well, we have a list of those tokens. So this is sourced from Cointelegraph. We're going to pull up my laptop here. So which tokens could FTX dump on the market? And we did do a poll on this, and we'll cover that in a second here. The new management of bankrupt FTX exchange has identified 5.5 billion in assets that can be used to repay creditors, sparking fears a large swath of crypto could be dumped on the markets. The best known holdings are Solana, FTT, along with XRP, Doge, Aptos, Matic, Toncoin, which I believe is Telegram's coin, and BitDAO. So liquidators are counting token prices on the day of filing and consider the 530 million of FTT to be liquid, which is kind of weird, as well as 685 million of Solana, which would mega nuke the Solana market. He added these were the only liquid tokens they counted, adding everything else is going to tank the price if you sell it.
What exactly is a meta nuke?
Mega nuke.
Mega nuke. Okay.
Meta nuke. So this is kind of a visual of the tokens here. You can obviously see kind of how it breaks down. So 39 million of Matic. The ones I'm kind of interested in is 90 million of E, 39 million of Polygon Matic. XRP I'm not too worried about. And then $685 million worth of Solana. Now, I'm going to ask Robin first. Rob, will this nuke the Solana market if all this is dumped? And is this something they can recover from?
You know what? If you would have asked me this like 3 days ago, I would say they would sell it over the counter and try not to tank the price and get the most value out of it. However, what we've seen is that they're trading, for example. So the people that are custody, or the new CEOs, people in charge of FTX through the bankruptcy, they have failed simply preventing liquidations. I mean, just easy, hey, remove your assets this way versus just letting it ride out and having liquidations across the board. They lost $5 million just in the last couple of weeks through liquidations. And so the people that are in charge of FTX right now, I don't think have any inclination on how crypto works, how the prices work. They obviously don't know how trading and leverage works because they're getting liquidated when they're just not closing their positions correctly. And so I don't have faith that they're going to be able to sell the tokens in the right way. I would assume they would call Coinbase and some other major exchanges and do an over-the-counter sale. But then at the same time, like, who the hell is going to buy that much Solana? I mean,
definitely, I don't think Coinbase will. Caleb, will you be buying any of the Solana that they're going to be dumping on the market?
Certainly not. And one thing I just did real quick to add some context, it looked like there was 685 million of Solana that they're holding. The current market cap of Solana, not the fully diluted, just the current, is right around 8 billion. So this is about 8.5% of the total value of Solana.
That's
so
pretty big.
Even if they sold all of it, you would probably expect, in a big chunk like that, right? If this just kind of happened instantaneously, this would essentially wipe out about 9% of the entire Solana market cap.
Damn. What are your thoughts on this? Do you agree? Do you think they will try to do this over the counter, or you think they just don't care? The bankruptcy judge is going to say, just get the money.
I think technically they care. I mean, we have to remember these lawyers, these corporate folks here are all going to be paid hourly. And so for them, the longer this takes in a lot of ways, the better. And so, I think that they are going to try to do right by creditors and depositors. But at the end of the day, we have to recognize what the incentives are here. These people get paid on an hourly basis. I think I just recently watched the Bernie Madoff documentary that's on Netflix right now. And one of the people who made the most money out of the Bernie Madoff blow up and getting creditors back their money was the main lawyer who was placed in charge of the liquidation process.
That's insane. That's insane. Can you, in the same sentence, say, we want to do what's best for our creditors, we're going to go file Chapter 11 bankruptcy, and you're literally paying these lawyers thousands of dollars an hour? Like, how could that money have been used differently? Like, are there better options? I mean, I just don't understand.
Yeah, I don't know if there are better options because unfortunately, U.S. regulation and law is extremely complex. And so, lawyers make, excuse my language, but a shit ton of money for a reason. I mean, even if we just look at the standard income tax code, right, it's about 80,000 pages long. I don't know who in their right mind has ever read that and all of the individual case studies within the tax code itself. So someone needs to navigate that. And clearly these people get paid handsomely in order to do so, whether it's right or wrong. Unfortunately, I think it might be one of the best kind of solutions that we have just based on how things are currently set up.
And so here's just a little reference for what I was talking about earlier. So this is this is who's in control of the wallet. So Alameda Wallet, under liquidators' control, incurs $11.5 million in losses. They've had just cascading liquidations, and a lot of these, as we mentioned, were preventable. And so this is why I'm drawing hesitancy that they're gonna liquidate their assets in an efficient manner that is most beneficial for returns. And then on top of that, I know we mentioned FTT. Like, who is anybody buying that?
Well, who are they going to dump it on?
Yeah, exactly. So I would assume that's zero or close to it, right?
Yeah.
And so it was half a billion dollars. Yeah. So they said they found $5 billion. Well, go ahead and subtract $500 million there. Is that good? Who's going to buy it? Like,
no one.
Exactly.
You brought up a great point, Caleb, in how much money these lawyers make and the incentive to get companies to file bankruptcy. Sam Bankman-Fried has come out and said multiple times, I wish I hadn't filed for bankruptcy. The lawyers told me it was the right move. And shortly after, I realized, hey, FTX US was insolvent. We could have paid money back. Now, of course, we have to take everything Sam says with a grain of salt. But are you more inclined to believe him because of what you just said, how much money these lawyers are making?
I'm not inclined to believe anything he says, even though, he's going to have probably, the closest pulse on everything that's happening. It's hard to give any trust in that after it's, clearly been taken advantage of. So who knows? And this is kind of the big mystery with the whole thing is everyone seems to kind of just be scratching their head as to, what's the best solution going forward? What are the missteps that were made after, basically, let's call it November 3rd. And what things could have been avoided had certain steps not been made. And so it's going to be the big mystery, and it's going to take years for us to find out, how this could have been handled probably in the most ideal way. But probably right now we're not going down that path, most likely.
I just want to give a quick shout out to a couple of our community members that have super chatted. We had Jimmy drop a $10 gifted membership. So big shout out to you, Jimmy. Also, Bullish Kenny G has given a $2 finger emoji hate symbol over there as well. And then Kazuma gave a $5 or €5. It says BTC is likened to gold, Litecoin to silver, Ethereum to oil. So that was
Also, before we move on to some macro stuff, guys, if you like Caleb, if you like his analysis, if you enjoy interviews and you enjoy this kind of content, put a 1 in the chat. And also go support our friend Caleb.
I better see a lot of 1s in the chat.
Better see a lot of
and hit the like button.
You look
like Caleb, let's pivot to macroeconomics. So first thing I want to talk about is Bitcoin and other crypto prices pump. Of course, this was before the DOJ announcement. After retail sales and PPI inflation falls more than expected. So this is sourced from Crypto News. The closely watched U.S. retail sales figure fell 1.1%, which was greater than the 0.8% forecasted. Meanwhile, the PPI, which is the producer price index, fell to 6.2% against the headline of 6.8% that was expected. The latest economic data should strengthen the hand of doves at the Fed to slow down on interest rate rises. The poor retail data shows that consumers are feeling the pinch of higher prices and are cutting back. And this is just a chart from Trading Economics of the PPI. You can see it has been in a downtrend, but this was the largest dip since June of 2022. So I'm going to ask you, Caleb, the question that was put into this article. Will this soften the tone at the Fed? Will the doves finally be able to sway the Fed to either stop or possibly, dare I say, start slashing rates?
So I've been very staunch for well over a year now that we should be taking the Fed at face value and expect basically a higher for longer interest rate regime, right? And so in February of 2022, I was sharing some very important charts saying buckle up because the Fed is about to embark on a historic tightening cycle. And then here we are. So right now, this PPI data that we got, I think on a month over month basis was down about 0.5%, and the expectation was something like negative 0.1. So again, this was a huge beat. And, thank God, right? We want to see these inflation dynamics really cool off. However, from my perspective, this doesn't really change too much in terms of the Fed's projected path forward. We're still expecting 1, if not 2, 0.25% rate hikes in the February meeting and the one thereafter. That's basically what I see as being in line. This is a great sign, though, which does, potentially kind of confirm that maybe that's all we need, right? Because since September now, I've been warning, I think that the Fed is going to over-tighten. They've already over-tightened. And unfortunately, they kind of made their own mess, and now they're having to sleep in it in a lot of different ways. But this PPI data essentially confirms a lot of what we got recently for the CPI data, which is that inflation continues to moderate and decelerate. That's the key word here. It's not a decline. It's decelerating back towards the Fed's long-term historic target.
We've been having an ongoing debate here, Sin City Crypto, and it's regards to where this CPI number is going to kind of settle in at halfway through the year. Mm-hmm. So June of 2022 is when we hit our all-time highs. I think we printed 9.1%. Mm-hmm. And it being a year-over-year number, do you think that we could see sub 2% on this CPI print come June? Do you think that's just too advantageous? Price of eggs have just messed up everything. I mean, what do you think for this June outlook year over year? Because I mean, we on a month to month basis we are going negative. So I mean, at some point it's got to balance out, right?
Yeah, I think so, but I do think 2% or the 2% range, so let's call it 2% to 2.99% is a little bit too optimistic. We're certainly headed in the right direction. We have energy prices that are in pure deflationary mode, which is a great sign. Those year-over-year base effects are really going to help us on a year-over-year basis. And now for the first time, at least for the CPI, and now for the PPI, we're getting the confirmation, is that we're having outright deflation on a month-over-month basis. And that's also very good news. The thing that I'm getting encouraged by, even though I won't go as far to say we'll get into the 2% range, is the fact that the Feds, or excuse me, not the Feds, but the Bureau of Labor Statistics measures housing and rent inflation. they call it shelter, through something called owner's equivalent rent. And the way that they calculate this is so bizarre to me. But what they do is they go to existing homeowners who live in their primary residence and they ask them, if you didn't live here and you decided to rent it out, what price would you rent your home for? So these are people who are living in their primary residence and maybe have zero clue about what the current rental market looks like, especially in their neighborhood. And
Hold on.
you know, it's this.
Did you say they go asking people a hypothetical question like, if you were not living here, what would you? Oh God. Sorry.
Yeah. So, you know, they're not looking at something like Zillow or apartment lists, actual rental history data, or anything like this, right? It's a complete imagination statistic. And so owner's equivalent rent, this thing that we just talked about, typically lags the actual housing and rental market by about 8 to 12 months. And so the shelter component makes up roughly 1/3 of the CPI. And so if housing and the rental market generally peaked in June or July of 2022, we wouldn't expect to see the shelter component of the CPI start to officially roll over until the second quarter of this year and leading into June. And so I think as we get into that June and July data, we'll really start to see, at least on a year-over-year basis, shelter cool down, because if anything, it's still only accelerating right now. And even though that, you know, we're talking about this, shelter is continuing to accelerate. It makes up 1/3 of the index, but all the measures of CPI are rolling over. So what happens when shelter starts to roll over as well, starting in June and July, most likely? That's going to be a great sign for year-over-year inflation dynamics. But I wouldn't go as far to say that we'll be in that 2% range quite just yet.
Amazing. I didn't know that's how they do it. That's pretty interesting. Staying on macro, Caleb, I want to share another tweet from you. Why is no one else talking about the relationship between the 3-month Treasury yield and the federal funds rate? This will provide a more meaningful signal than the 2-year comparison to the federal funds rate, now that everyone is focused on the 2-year. Don't watch the same thing as everyone else. And Caleb, I also understand you have some charts, so please, at any time you'd like, feel free to share any information that you have, but maybe speak on this a little bit.
Yeah, and thank you for giving me an opportunity to go over this. I wasn't even planning on it, but I think this is a great space to do it, and hopefully people who are watching get some value here. A lot of people are hyper-focused, as they should be, on the relationship between the 2-year Treasury yield and the federal funds rate. This is something that I was really pounding the table on in February of 2022, because typically the Fed is going to follow the bond market. The bond market has the ability to skate to where the puck is going, forecasting all the different dynamics from monetary policy, inflation, and economic growth. That's what drives yields. And so last year, when the 2-year Treasury yield was trading significantly higher than the federal funds rate, this is what I was saying in February and March of 2022. Listen, the bond market is telling us something about where the Fed is going to be going, and it's pointing to much tighter financial conditions, much higher interest rates. Now what's happened since the last 0.5% rate hike is we've actually gotten an inversion between the 2-year and the federal funds rate. And historically, there's a bit of a precedence here that once that inversion occurs, the Fed is done raising rates. They might pause for several months, and then the 2-year continues to decline thereafter, and the Fed follows it lower. This is a very optimistic view of current market dynamics, especially because we know the Fed is planning to do at least one more 0.25% rate hike, and depending on how inflation dynamics evolve thereafter, they could still continue to tighten and then keep rates elevated thereafter. So this is why, for me, it's become very important to now look even shorter on the maturity scale and look at something like the 3-month Treasury yield, because there's also a very clear relationship here. We're looking at the 3-month Treasury yield in red and the effective federal funds rate in blue. And we can see, once again, these two variables are going to closely move with each other. And so from that perspective, the last I checked, the 3-month Treasury yield was trading around 4.6, just above there. And right now, the effective federal funds rate is 4.33. So we basically have 0.3% of rate hikes left in the tank. I'm curious to know how that's actually evolved today. I haven't had a chance to look at the 3-month yield, but I'm guessing we're seeing a decline in that yield, which likely means that, hey, maybe a 0.25% rate hike is going to be the last one. Either way, right now, I think that this relationship is going to be more important than the relationship with the 2-year Treasury yield going forward.
All right. That was so good. I have, so I got a couple questions here. So let me do this real quick. So
did you have any charts you wanted to show us? I know we were.
I'm happy to go over some Bitcoin stuff. I wanted to go over that Williams percent R one, so I'm really glad we had a chance to do that. Maybe what we could do really quick. Yeah, I'd love to go over a Bitcoin chart, but if you guys wanted to do some more macro stuff, we could round that out and then kind of just go with the flow. It's up to you guys.
Just for the flow, I do have a couple more macro stuff, and then we'll pivot to Bitcoin. So
let's do it.
So you heard the news about Saudi Arabia getting off, essentially saying we are open to accepting anything outside the U.S. dollar for trade. Now, we understand, them getting off the petrodollar. We understand that the dollar is the number one asset held on other countries' banks' balance sheets. If countries start taking other stuff, currencies other than the U.S. dollar or commodities other than the U.S. dollar, how would it affect the treasury market, the liquidity? What are some of the trickle-down effects you can forecast, you can see moving forward if this is a trend that continues?
Admittedly, that's not something I've really thought a lot about. So I'm happy to just kind of give some off the cuff remarks about it. But yeah, certainly there's no bull case for the dollar if countries are the petrodollar has been in place now for 60 some odd years, essentially. And so, with that understanding in mind, as countries might start to, or as OPEC might start to, be open to accepting other forms of currencies, right? This is essentially what Russia did at the onset of the invasion of Ukraine. It'll be interesting to see how that kind of impacts broader demand for the US dollar. Personally, I don't think we're going to see this widespread adoption of, countries paying in like the Swiss franc or the Japanese yen, right? And so I still think even if OPEC says that they'll accept other currencies, which might be a fairly slim chance in actual practice, I don't think that there would be much of a significant. I don't view many countries being opportunistic of that and taking advantage of using non-dollar currencies, just because look at the strength of the dollar, right? And look at the resiliency it showed over the course of the last 18 months, right? So clearly they still want to be holding those dollars because at the end of the day, that's where they're going to find the most safety from a traditional sense.
Yeah, I'm kind of in that camp that even if they offer a different currency that you can pay in, for example, I think still people will default to the dollar as the go-to, and I think it'll be more gimmicky to use something else, at least in the short term. I don't think petrodollar is going anywhere anytime soon.
Yeah, well, right. But it is something, you come out on a global stage and you say flat out, yeah, we are willing. It could send shockwaves. And then one last, go ahead, Caleb, you have something to say?
Yeah, I just wanted to say, right, like that could be kind of like an early stage domino that really starts knocking things down 5, 10, 20 years down the line, right? Because in order to officially get off of something, you can't just snap your finger and have that happen overnight. It's really a trend and sentiment shift, right? You have to go with the current, essentially. And so I'm not trying to diminish the impact of it, but I think right now, how it's going to impact market dynamics, not much, but over the long run, certainly there could be an impact, just to clarify.
Now, Janet Yellen, the Treasury Secretary, did come out and say if they don't raise the debt ceiling, the U.S. could default on their obligations, right? And so we understand that when the Fed raises interest rates, servicing debt becomes more expensive. And the Fed has come out and said if the Treasury securities, if they face a liquidity crunch, we will step in and provide that liquidity. With the Congress essentially unless they want to default on credit, which I'm pretty sure we can all agree, there is no way that's happening unless we're going into war or something. They're going to have to raise that debt ceiling. What does that mean for the overall macro environment? Does that mean it could be bad for inflation? Does that mean the Fed's going to have to pause or reverse or provide liquidity somehow? What does that mean?
Yeah, so once again, this is just going to purely be kind of political theater in a lot of ways, basically stir up a commotion, all for nothing, right? Because we see this same story pretty much every single year, every 2 years, whatever. And it always feels like this one is bigger than the last or more important than the last. And we're going to default on our debt if we don't get this done. So we better get it done. And then in the 11th hour, it always gets done. You raise a great point, which is that as the Fed raises rates and debt with a fixed interest rate starts to roll off and mature, companies, institutions, firms, governments need to reissue debt basically to keep rolling things over, right? It's called rolling over the debt. Sorry, I think Siri just got activated on my side. I hope it didn't interrupt anything. Jesus. Lost my train of thought completely. But essentially, right, as that debt matures, here we go. Yeah, exactly. So as that debt matures, people are going to need to lock in new terms of financing at a much higher interest rate. And so that's certainly going to put a lot of pressure on whether it's the Treasury, the US government, blue chip, mega cap stocks, whatever the case is, right? And so that will certainly put an impact on overall. I think a lot of that debt, I saw some chart and I think I probably forgot to bookmark it, but it was looking at the amount of the percentage of existing debt that's set to mature within the next 12 months. And it's basically at like an all-time high. And so there's going to be a lot of debt that rolls over at some point in 2023 that is going to be locked in at these very high interest rates. And so clearly that environment, likely the environment that we're in right now, isn't likely to persist. But that doesn't mean that companies and governments who have to lock in and issue new debt now and lock in these much higher rates aren't going to struggle necessarily in the short term. And so, as that rate environment falls, most likely over the long run, I mean, look at the long-term chart of yields in the United States, and they're just trending from the top left to the bottom right over time, right? And so eventually governments, firms, institutions, and individuals will be able to issue new debt and lock in lower rates and maybe pay off the older debt, whatever the case is, right? Essentially a Ponzi scheme in a lot of different ways. It's just a pyramid scheme of debt rolled onto itself over and over and over again. So I don't necessarily think that the fact that we have all this debt maturing this year is going to, be some sort of apocalyptic scenario, but it's certainly something to have on our radar.
You literally, the U.S. government is literally a Ponzi scheme, because as they issued new treasury bonds and bills and notes, they're essentially using that money to raise more money to pay off old debtors or old people they owe money to. So that's pretty interesting. All right, Caleb, I know you said you had a Bitcoin chart. Please feel free to share it.
Let's do it. Here we go.
While you pull that up here, I'll give you a quick minute.
real quick before he does. The people want to know in the chat.
Yeah.
Are you drinking a White Claw?
No, I'm drinking a Celsius, but I may as well. I should grab a White Claw, man. That's what I should be doing.
Did you say Celsius? Whoa.
Yeah.
So a little shout out to some of our new members. Drawing a pretty good crowd here, Caleb. We got Rodney, Myfo, Myron, Napoli, Crispy, Dodo, Bill, McDonald. To all of you, hola, welcome. All right, Caleb, go ahead, my friend.
Okay, let's do it. Let me share the screen back. So what we're doing here is we're going to be looking at the price of Bitcoin. And what I've done is I've added on the 200-day moving average cloud. So in blue, we're looking at the 200-day exponential moving average. In yellow, we're looking at the simple moving average. What we can see generally is that, price is going to do kind of weird things around this range. We use it as resistance here, kind of a consolidation here, but essentially flipped it into support, consolidation again, resistance, and now we're coming back into it. I was outlining this in real time as we kind of came back into this range that, hey, for the first time now, we're decisively breaking out above this level. If we remember back to the March rally, we couldn't break above it. We couldn't close above it. We got perfectly rejected on the simple moving average, right? I prefer to use this cloud because it gives me a range of dynamic support and resistance. Either way now, for the first time, we've actually been able to break above it. But now we're getting some of that selling pressure return into the market today, right? We've gone on this exponential run over the course of the past, let's call it 3 weeks. Basically, since the start of the year, since the December 31st close, the price of Bitcoin was up as much as 31% essentially. And those are almost purely green candles on the way up, right? Just getting steeper and steeper. So for me, that's literally an exponential rise. And so we would expect markets to cool down. Every trending market does three things. We go through an initial extension phase. We go through a consolidation, basically a retracement of that initial extension. And then hopefully we can get a trend continuation where we go back higher, right? And so for me, this level is clearly dynamic resistance, but now that we've flipped above it, it's officially dynamic support. And so today's sell-off, we did enter into this range. That could be the worst of it. I don't necessarily think it is, but this essentially gives us another, let's call it 6.5% of downside before we fall back below the simple moving average here for the 200-day. And so for me, that's really the line in the sand. I think we can continue to be bullish about this initial extension move so long as we remain above this entire yellow to teal range. And so, like I said, that basically gives us a 6.5% cushion here before things officially kind of get bearish, at least in terms of my charts. One thing that I could add on to here really quickly is some other key structure that I was outlining basically since the second and third quarter of last year. If we get a steeper decline, even if we fall back below that 200, this entire red range was support throughout 2022, flipped it into resistance in December, and then we actually got the breakout. So once again, for anyone who likes technical analysis out there, it's a huge piece of my approach to studying markets. This essentially, again, gives us another 15% decline where the lows could essentially be in, right? And so I like this setup a lot. I'm not necessarily longing anything right now, but knowing that this dynamic is currently in place, I think that there's still, we just need to contextualize a consolidation or a pullback here is essentially normal and to be expected. And there isn't necessarily anything to panic about so long as we continue to interact positively with this red range and with the 200-day moving average cloud.
Amazing. Are there any other charts you wanted to show, Caleb? I know. So we know we had you slated for 30 minutes, but this conversation is so good. We've kept you longer. Hopefully that's not an issue.
Oh my God, it's 2:40. No, I'm totally kidding. No, I'm down to stay. I'm down to stay with you guys for however long, man. I cleared out my schedule. So
amazing.
Maybe one last chart here that we could do. Let's pull up BTC USD, and what I've got here on the Coinbase chart, we should have it. There we go. Let me delete some of this stuff because it's going to be noise for the sake of this conversation. But essentially what we're looking, and let me get rid of these moving averages too. We don't need those anymore. Essentially for this conversation, what I'd like to do is look at something called the anchored volume weighted average price. And what we could do, technicians love using this level and this specific indicator because when you tag it from a low or a high, it can act as support when you pivot it from the, oh, excuse me, am I even sharing my screen? Sorry, guys.
Not yet.
Oh my goodness. Well, it's okay. Now we got it all set up, so it's all good.
Yep,
okay,
good.
So what we're looking at here is Bitcoin US dollar on Coinbase. And what I've added here is the anchored volume weighted average price from those 2015 lows and from the 2021 highs. And so we could see that this band here, it's not perfect support, but during a bear market, we test this. We did this in the 2018-19 bear market. We did it during 2020. So all the way going back from those pivot lows from 2015. And guess what? We retested it perfectly during that November decline. It's like the retest can't get smoother than that. And what's happened since is we've been rebounding, we've been rallying, right? And so the other thing I'd like to point out is we also have it from the pivot highs from November of 2021. You can see almost perfectly it was resistance on weekly candles. If we go into daily, it was a near perfect retest as well. We actually did get slightly above that level and then fell down further. And so for me, I wouldn't be surprised if we do get another rally. I don't know if it's this rally or if we'll just continue to go up from here. But I'm essentially looking at this $30,100 range as basically one price target and one potential resistance level, which basically from today's current price gives us about 43, 44% upside, which isn't bad at all. And the lower we go, the closer we get back to this lower bound of this green range, the better that risk reward becomes to the upside. And so again, I'm not looking to rush in and buy anything now. I've actually paused my dollar cost average purchases basically since the FTX November scandal situation. Just trying to let the dust settle there, but generally speaking, this is a chart that I definitely have on my radar to really try to understand where could the market be going. And if it does get there, how could we expect price to play out thereafter? And so for me, like I said, that $30,100 level based on that anchored volume weighted average price from the November 2021 highs is definitely something I'd be looking at.
Awesome, man. I want to talk about DCG. So I'm sure you've been following Digital Currency Group, Genesis Global Trading. There's rumors that Genesis is getting ready to file Chapter 11 bankruptcy. Although there are rumors, I haven't seen anything that confirmed it. Obviously, it's affected Gemini. It's affected it's affected companies like Silvergate. And so now DCG has come out and they have suspended their dividends amid distress at Genesis. This is a source from CoinDesk, which also owns, DCG owns, it's part of their subsidiaries. Cryptocurrency conglomerate Digital Currency Group has informed its shareholders the firm is suspending dividends until further notice. In response to that, so this is a quote from DCG. In response to the current market environment, DCG has been focused on strengthening our balance sheet by reducing operating expenses and preserving liquidity. As such, we have made the decision to suspend DCG's quarterly dividend distribution until further notice. Caleb, is this enough to cause panic from if you're a holder of the DCG stock? If a company all of a sudden, right, and you talked about it, Merrill Lynch, portfolio management, is this something where you get on a call, if you're managing portfolios, you get on a call with clients and say, we got to take everything out of DCG right now, or is this kind of overblown?
I certainly don't think it's overblown. I don't think that the pausing of their distributions for dividends is necessarily like the straw that breaks the camel's back to finally get people out. I think the headlines in and of themselves over the past month plus are sufficient enough. And so this is important. I'm surprised the announcement didn't come out sooner, but at the end of the day, they pay this quarterly. So it's not as though, if they had announced it 2 weeks earlier, it's not like it would have made any difference financially. And so we're just finally getting the news of it. It's the right move for them to make, both in terms of optics and how they're managing their assets and so on and so forth. So it'll be interesting to see. Again, I think with like the entire broader kind of crypto markets, right? If you where there's smoke, there's fire, right? And that's not just for crypto. And so with crypto, we have this ability to trust and verify, and we should be verifying. And if we can't verify, we should probably be a little bit skeptical and not just take things at face value based on what a company or talking heads and pundits are saying about internally what's happening there. And so. I think you kind of hit the nail on the head. If someone owns shares in this, private or public, right? I mean, you gotta find a way to start kind of getting away from that source. And so that dynamic will likely continue to play out over the coming months, even if everything is totally fine and dandy over there, right? It's like when there's fear, people are going to act. So.
That's true. And before I ask Robin, let me ask you, so Ben Armstrong from BitBoy Crypto, he believes that a DCG/Genesis collapse is already baked into the price of crypto. Do you share that same sentiment, or do you think that if DCG goes down or Genesis goes down, it's going to bring the crypto market down?
So it's a great point, because markets are forward-looking pricing mechanisms, right? And so investors have the opportunity to weigh the evidence, weigh a certain probability, and price that in. And so no one knows how much the extent of any given event is priced into the market, right? So maybe right now the broader market is pricing in a 30% chance of a decline of DCG. If everything was 100% priced in, first of all, that's going to be extremely rare, and it almost only happens after the fact, right? And so, maybe right now the market has an overwhelming consensus that this thing is going to collapse, and maybe it's a 70 or 80% likelihood. So the market is priced in 80% likelihood that occurs. So it's anyone's guess to what extent that actual percentage is. Unfortunately, we don't have a poll or anything that we could actually, kind of diagnose what that percentage is. It's certainly priced in to an extent. How much? It's hard for me to say.
What about you, Rob? Do you think this is a death blow to any confidence people might still have in DCG? Suspending dividends, that might be part of the reason why people invested in the company, is because of dividends.
DCG's image is at least tarnished right now, right? And I don't hear anybody talking about the Grayscale's Bitcoin fund. I mean, that was kind of a big buzzword all the way up until now, even during the last bear market. And so now I think they have an image problem. So I think they're going to have to fundamentally change things up. As far as it being priced in, if they were to have some kind of collapse or bankruptcy, perhaps, sure, yeah, obviously the price would tank, or at least the expectations of that would happen. But I don't think a lot of people are taking into consideration how many companies and blockchain entities are intertwined with DCG and all of their other companies and their umbrella of portfolios that they've invested in. Anyways, there's no way that you can account for all of that. There's no way. And there will be, if DCG goes under, there will be other major companies that will be deeply impacted that would if not fail, file for bankruptcy, default on some kind of debt. And so I don't think you can like forecast that. And
well, the good thing with DCG is they have actual valuable assets that people would be more than happy to buy. You had Valkyrie already came out and said, hey, we'd be more than happy to take over GBTC. They have the Foundry, which does Bitcoin mining services. You have CoinDesk. Obviously, Genesis is bye-bye. So is it enough to keep him out of bankruptcy and have it liquidated everything? I don't know. Caleb, before we let you go, I have one very important question, and Robin knows what's coming. What are your thoughts on barbecue chicken pizza? Are you a fan or are you not a fan?
Well, look, I don't know where you guys sit on this, but I every now and then you got to go for it, right? I mean, come on, you can mix it up. I mean, throw some onions on there, maybe. Call it a day. I don't know.
Bacon?
Yeah, bacon, ranch, just douse it up, man. As long as there's no pineapple, we're good. As long as there's no pineapple, we're good.
So the gentleman you see on the screen,
I can't.
That's the Don. So he is his family is the one that built this city. They're also from Italy. And so when we were in Atlanta, we were at a restaurant. It was a pizza place. I ordered a barbecue chicken pizza. And Rocco gave me the nastiest look. I thought he was going to take floss out of his backpack and strangle me with it, like Joe Pesci did in a Casino movie. And so we've had this debate all throughout the year, last year. So anytime we bring a guest on, we always ask him. Caleb, before we let you go, a couple things. One thing is anything you want to leave us with. Obviously, we have Caleb's Twitter. We have his Substack. If you enjoyed his analysis, which how could you not, you can subscribe for free to his I believe weekly or daily newsletter.
I do a weekly newsletter for free.
Weekly newsletter. The link is there. All you got to do is go in the description, click it. But is there anything else that you want to talk about or you want to leave us with? And then there's one more thing after that before we let you go.
Okay, no, it was a pleasure to come on, guys. You reached out to me over Twitter after seeing me on Around the Blockchain. It's fantastic to come up here. Always love meeting new people in the space. And so really, just appreciate the opportunity to come on, help kind of share my message a little bit, and hopefully people in the audience enjoyed our conversation. But it was really great to meet you guys. Definitely check out the newsletter at Cubic Analytics. It's on Substack. Like I said, it's a free newsletter where I talk about macro, the stock market, and Bitcoin. I don't go into the alts in this newsletter, but I'm always talking about Bitcoin price action. And so clearly that's going to have an impact on alts. And so that's kind of the bedrock for crypto, as everyone knows. So definitely keep an eye out for that. And then I obviously do premium research on top of that. It's mostly about stock market dynamics though. So it might not necessarily be for people on this call, but definitely check out the free newsletter. Follow me on Twitter. We got 24,000 plus on Twitter. So people seem to be enjoying the content, enjoying the research, especially the macro focused stuff. And guys, it was a pleasure. We'll have to do this again sometime.
Amen to that. We definitely look forward to having you back on. And you tweet a lot. You tweet a lot of charts. You tweet a lot of analysis. So we definitely take some of your stuff and use it on the show. And if you're watching, you should do too. And I believe there's one more thing we need of you.
So I do want to give a shout out to Jimmy, another 10 gifted memberships. And we also got a couple of new people in the chat. We got La Lola, 98, and Zoltan. Hola to you. And then that's our thing here is Hola, man. You a Hola, man? You got a good Hola?
Yeah, Hola, what's good? Yeah.
Hola, what's good? There it is.
Give us a nice Hola. Give us a nice Hola before you leave.
I like that snap action you did. So, Hola.
My guy.
There it is. We're gonna montage this thing in the future. So
moving forward, you are number one. You're the first guest to ever give an Hola. We will. This is a trend that will continue with every guest moving forward.
All right.
Caleb, thank you so much for your time. We truly appreciate you. We definitely look forward to bringing you on again. Guys, please go support the guests that join our show. All you got to do is click 2 links, get the free newsletter, go follow him on Twitter. And Caleb, have an amazing day, my friend. We look forward to seeing you again.
thank you, brother.
Thank you, guys. Take care.
You too. Man, that's good stuff, bro. That's like my wheelhouse right there, bro.
Yeah, man.
I got to talk to him for another 2 hours. But for the sake of the show, I did not. All right. We are done, my friends.
Are we? We were so close opening the club, man. We got to 271.
Yeah, no, that was very close, yeah.
We did not get
271 was the
very,
closest.
very close.
That's what YouTube said.
Concurrent viewers. I'm looking at the chart. 270. Oh, it said 272 is the highest.
Okay, fine. Let's go over one more article then. Maybe we will open up the club.
Okay, this is your last chance. Bring your friends. Turn on your extra iPad you got in the corner. Drop a like button.
All right, so here's an article. BIS economists recommend 3 crypto policies for regulators worldwide to adopt. So BIS is the Bank of International Settlement. Now, if you guys remember, they did come out, which, by the way, Corn Bureau did a very good, in-depth video on this.
I would Corn Bureau?
Coin Bureau. Guy from Coin Bureau.
It's got the juice.
So he broke this down, the different tiers, but essentially the BIS came out and said any international bank, the guideline is 1% could be put into the Bitcoin and certain crypto, up to 2% on certain other ones that they fall in categories. I don't have those exact details, but now they've come out with 3 recommended policies for regulators globally. The Bank of International Settlement published a bulletin last week titled Addressing the Risks in Crypto, laying out the options. The report discusses risks associated with crypto and the various options available to regulators and central banks for addressing these risks. The authors outlined 3 potential lines of action. The report, and we'll go over that in a second, the report clarifies that the 3 options are not mutually exclusive and could be selectively combined to mitigate the risk emanating from crypto activities. And here they are, my friends. The first option is to completely ban cryptocurrency. What are the pros?
Yes, please.
Eliminate potential harm to the financial system. A pro, prevent losses due to crypto service provider misconduct. What are some of the negatives of banning crypto? Well, it could conflict with founding principles of society. Useful innovation would be lost or delayed, maybe circumvented in practice. So they're essentially saying there's no way to stop it. The second option is to contain crypto, to isolate crypto from traditional finance and the real economy. What are some pros? Prevent crypto from damaging the real economy. Avoid giving crypto a regulatory, quote, seal of approval. What are some negatives? Fully effective firewall may not be feasible. Again, saying they cannot stop it. And the third one is to regulate crypto. Regulate the sector in a manner akin to traditional finance. What are some pros? To ensure consistency in regulating financial activities, to allow responsible players to innovate in a regulated space. Now, what are some negatives to regulating crypto, according to the BIS? Challenge to map crypto and TradFi activities, and challenges for enforcement, given the lack of clear reference points in some cases of DeFi. So what I got from this is that they know, no matter what they do, they cannot control or stop or ban cryptocurrency. This is bullish to me. What are your thoughts, Rob?
It's a stupid company.
It's not a company. It's a regulatory body.
Regulator. Trying to put their professional opinion on something they don't understand. Right?
Well, they understand at least.
They understand traditional finance. They're like, oh, it's kind of similar-ish. Yeah, I mean, it's got some things that yeah, so why don't we do it this way? Or just ban it. I don't know. One of the 2. Anyways, we didn't get the viewers.
Yeah.
They started leaving.
All right, guys, we are finito. Make sure to please, all seriousness, guys, not a single guest we brought on has ever asked us for anything in return. We just want our community to show that we are the bomb, and we support people who come and impart their knowledge on us. So please go give Caleb a follow. Go subscribe to his free weekly newsletter. I'm telling you, I've been subscribed for a while. Great content in there. Also, check out our merch store, not just Sin City merch, but also other cryptocurrency-related merchandise. Also, Robin, put your down. I have the hammer now, bro. You see this hammer? It's going to come right at you. It ain't coming back. Or I'm going to get the light. This is so dope, bro. I'm taking this home to show my kids, and I'll bring it back. Oh, yes.
We should mount it behind Rocco over there.
Yeah. On behalf of myself and Thor's hammer, Rocco?
You should wave the hammer instead of finger.
Oh, yeah.
No, because then it'll break something. Rocco!
Well, that's right.
Friends, fam. Where's the music at, bro?
Don't worry, go for it.
I can't. I don't. All right, guys. Thanks for checking us out. I can't do my regular intro because these guys ruined it. But huge shout out to everyone watching. On behalf of myself, Robin, Rocco, Tyler, and our special guest, Caleb Franzen. We will see you guys. Tomorrow is Gala Day. We also have one more special guest. Dan from the Chart Guys will be joining us. We had him on before. Make sure to come back. That'll do it, guys.
Yay.
Take care.
Peace. Have a good one.